Hi there, you're watching Closing Bell with me, Stacy Pereira, and let's just get you up to speed with how the trading day has been. And we could say we have managed to hold on to the green, at least the benchmarks, and extending that gain that we saw from yesterday. Both the Sensex gaining 190 odd points, whereas the Nifty too there holding on to that 22,000 odd levels, closing in there in the green. We could say for the broader indices as well, some bit of semblance, the bank nifty also in the green, but it was mostly the IT stocks which were your biggest drag. So most of the components in the laggard list has to be your big IT names, and we'll be discussing what exactly is happening. But whereas on the flip side we had metal, auto, realty, FMCG, all of those among your top gainers. Now there was also a note that came out from the finance ministry which said that India's economy was holding quite strong amidst this sluggish global growth, so giving some bit of positive momentum there. But let's look at those specific IT stocks. We saw Invasset, which was down and about by about 2%. This also after it saw a block deal of sorts where we saw close to 5 million shares exchanging hand. But not just that, there was also a couple of brokerage notes that came out on the IT sector, and all of this on the back of Accenture's earnings, or rather the cut that they've given in their revenue guidance coming ahead. So we'll be discussing that. But let's also talk about other gainers. We did see Hero Moto as well as Maruti, which were among your top gainers in trade. Hero Moto gaining close to 4% post the launch of its first EV ownership package. So how is the whole auto pack really taking it? We'll be discussing all of that and more, and joining me for that now is Anirudh Garg. He's the partner and head of research at Invasset PMS. Thanks so much, Anirudh, for speaking with us and giving us your time. Let's talk firstly about the whole IT pack. What happened today? Of course, we've seen in the past as well where we've seen a bad earnings season so far, and that recovery not really coming through. But there were many who had contra calls and said that IT perhaps is a place to be at right now, is a particular sector to be looking into. But today's bleed, how would you really, is that a knee-jerk reaction, you would say, for the whole IT pack?
Thank you for having me, Stacey. First of all, we feel that like any other sector, IT has cyclicity, but the cyclicity in IT, and though it is more cyclical than the FMCG uh, belt, but less than the other interest rate sensitives we see. I think the down cycle for IT is almost over. For the last 1.5 years, we've not owned IT at all. But in the last 1 to 2 months, we have started building up our positions in IT. And thanks to all these knee-jerk reactions, as you said, that are happening, we believe it's a knee-jerk reaction. We will add on to our positions. We believe that IT is at a very reasonable valuations, though they would not be the leaders of the market for the next 2 to 3 years. But when the markets are in situations like these, where they're on an expensive note, preservation of capital also becomes equally important. And I think IT should be a part of your portfolio if you want to focus on preservation, and I would say appreciation as well, but to a decent amount,
Right.
not
Anirudh, you are
the exuberance that we have seen in the last 1.5 year.
Yeah, you are saying that keep IT in your portfolio, but is this a good time to enter perhaps? Because if you're looking at LTI Mindtree, those shares have hit a 2-month low. Infosys at an 8-month low currently and seeing quite a bit of sharp cuts. Tech Mahindra has slipped to an 8-week low. So pretty much all of them. Wipro, yesterday we saw the ADRs also soon after Accenture's results, really take it on the chin. And you're having brokerages give quite a divergence in terms of how they're calling it, because if you look, like we just mentioned, most of them are saying there is more caution one needs to maintain going ahead. But like Nomura is pessimistic, particularly on TCS, Wipro, LTI, Mindtree, whereas it has still kept a buy call on Tech Mahindra. So how is this? How stock specific is one supposed to be within the IT pack? And should one be looking at the mid cap IT versus the large cap? What would be your strategy when it comes to these?
We would be focusing more on the large cap side, because we believe that as the markets they get expensive, when the index management happens, large cap IT would play its role. And somewhere down the line, there's still not fear in the market. Markets are at a very expensive valuation when it comes to mid and small caps. So I think IT should be a part of your portfolio, but just to a consideration that like we have never taken IT more than 20%. We are in the early teens right now. So just try to manage what overall part of the portfolio they are. But large cap IT looks good to us.
Right. So you need to be stock specific, one would say. Keep more focus on the large cap, because and you'll have to read through each of these brokerage reports, because if there's a Nomura that's saying, there might be still more pessimism among IT, Nuvama, which is a domestic brokerage, is saying, there is more positives ahead for the sector. But let's move on from IT, and another one that was in the red, another counter in the red rather today, was that of Paytm, and this after Motilal Oswal has come out with a brokerage note on Paytm, and they have said something positive in the sense that they say a 30% upside in the stock. Even after all those big swings that we've seen, they continue to maintain a neutral rating, and they've kept they've upped the target price, one would say, to about 530 after all those cuts that we've been seeing for Paytm. So Anirudh, your word on this. Of course, the street has been quite a wait and watch player when it comes to Paytm. Yes, of course, it had got that nod from NPCI just last week, and it's become that third party app provider when it comes to UPI services. But is there more pain? Is there more risk involved in this counter, and how should one be playing it? Or because there are such dips that have come in, it's a good time to enter?
Okay, so we have not held any positions in Paytm ever. We have been advocating on various platforms that Paytm, I would say the norms in Paytm were very, very weak. And though the app was wonderful, the product was wonderful, but when you come to the financial part of things, you need to be very, very efficient in what you're doing. Paytm has never done that. I do not think that Paytm will be able to recover from this, or even if it does, I hope they do. But we would not be holding any positions in Paytm, not today, not 2 years down the line, until and unless things are very, very clear to us, because this is they operate in a financial world where ethics and trust are the main thing, and that is something that the company has lost. And also, Stacy, when some companies, they get their IPOs listed in exuberant markets, as that happened with Zomato and Paytm, the valuations that they have commanded in the past, Paytm coming down all the way from 2000 to current levels, they may seem cheap because of the correction that has happened. But if you look at the overall valuations, I still believe that they are expensive, and has come should not be looked at from a point of view that they have corrected enough and there is too much value. They were listed at very exuberant valuations. There are very few champions like Dipinder who can go and transform Blinkit and make it one of the best possible platforms. Yeah, yes, there are very, very rare events like that in the market. Paytm, I think, should be a avoid for the investors. There are much, much better opportunities out there in the market.
Right. So is this skepticism among all of these new age tech stocks? Like you did say, there could be some game changers when it comes to the leadership and how they really take on the companies. But there are quite a few that have actually managed to, now turn profitable. So is this view just on Paytm particularly, or of most new age tech stocks, you would say?
So we have not owned any new age tech stock. We believe that this is an old economy run, which is focusing on value. And when we look at the value, it is more prevalent in old economy. Just by the rule, it is more prevalent in old economy and mid and small caps. So when it comes to new age stocks, I do not intend to say that all of them are very bad business propositions. I just say that they were listed at, and one should take care of that.
Right. Wasn't able to get your order quite clearly there, but okay, let's shift focus towards, like you said, some of the traditional players, and maybe not outrightly traditional, but let's get your view on real estate. Now today among the top gainers was Prestige Estates, and this after they've the stock that counter up by about 5%. Now this after they've said that they're going on to acquire about 62.5 acres in the national capital region. So they are foraying into the north. Remember, Prestige is mostly a south dominant, real estate company, but now getting into the north as well. That giving this counter leg up. But let's get an overall sense on the real estate segment as a whole. That one has also seen quite a bit of flip-flops, but one would say that the real estate market is moving away from that downtrend that it has seen from over the years. Is there some bit of positivity there, or would you look at the stocks specifically in real estate, those players, or should it be then the ancillaries that could actually benefit more?
Okay, so how we look at it is that it is very, very difficult to generate a collective demand in any sector. Real estate has been successful in doing that, especially in a country like India. We are, state investments. And what has happened in the last 2 to 3 years is that asset prices all over the world have gone up, and that has put a lot of disposable income into the hands of the consumer. And the credit growth in India has been great. So what has happened is that a FOMO effect has come in real estate, where people feel that the prices of real estate are going up at such a fast rate that if they do not buy, they will be left out. And also the premiumization concept that is playing all over the world. You will see luxury items being sold off, at launch, projects which you had not heard of, 40, 50 crore flats being sold out in Gurgaon on the day of launch. So it is a long-term story. You should be a part of it. Luxury followed by luxury real estate, followed by industrial real estate, and then housing.
Mm-hmm. Interesting. So that is, you're actually seeing more spends towards luxury when it comes to real estate. And, we've been seeing some big ticket projects actually, and even actors and all being quite vocal about the assets that they buy in the real estate space. We'll also address another stock that was quite a buzz today, that of Amber Enterprise. Now, this coming among your electronic manufacturing segment, and this because CLSA has gone on to initiate a buy call with a target of about 4,300 per share for Amber Enterprise, and they say that the recent correction that the stock has seen makes this now an attractive entry point. Of course, this weakness was driven by the broader market fall that we've seen of late. A lot of stocks that saw that bit of volatility because of those stress tests that mutual funds had to create. But the whole mid and small cap space did see quite a bit of swings in the last whole week. We could say some bit of semblance coming back now. But when it comes to Amber Enterprise, at least the earnings also have overdone themselves, and which is why the brokerages do see that there is some bit of more positivity. We are getting into a summer season, so which is why your demand for ACs and that one is also quite a positive for this counter. But besides just this business, maybe Anirudh could give us his view on the whole mid and small cap party. Is that over, would you say, or do you think that one needs to still keep an eye out on them, and what would then be the kind of stocks one should be cherry picking among the mid and small cap?
Sure. So firstly, about Amber Enterprises, we've held this company back in 2021 to 2022. It is a wonderful company, first of all, and wonderful product. And they are the leaders in what they are doing. So I've not checked the earnings very recently, but yes, I was very, very sure of this company going ahead that it is one of the better bets out there in the market. When it comes to small and mid caps, we believe that the exuberance that we saw in January this year actually have made the mid and small caps a little bit expensive. Not little bit, I would say expensive. What has happened now, in expensive markets, you have to look at the risk reward matrix. There is still a 15 to 20% upside possible in the mid and small caps. That is how we see it. But the downside we see that is equally big, or rather bigger. There are 15 to 25% downside is also possible.
Right.
While in the large caps, we feel that there is a 7 to 10% upside from here at least. But if downside happens, it should not be more than 5 to 8%.
Okay.
That is the historical figures that are telling us. though they're not a surety, but yes, when you are in the market, you have to look at the historical figures based on multimodal risk reward models.
Hmm.
So we believe that the best time to invest in the markets is that when nobody is investing in the markets, when the markets they are dull, they are boring.
Hmm.
Right now, the markets are piping hot. So the preservation of capital, I would like to advise my investor friends that is equally important and even more important than generation of alpha.
Hmm.
So the next 1 year, I believe that whosoever is able to preserve the capital from the downsides should be the winner going ahead.
Right. So you're not having any specific picks within whether it should be, the mid and small cap, or whether that rotation now needs to happen towards the large cap. But of course, we've been repeatedly saying it is a stock specific market, and perhaps that buy on dip strategy is what would work out for the others. And like Anirudh is pointing out, maybe the ones that actually manage to sustain this and generate alpha would then be the ones that will go on to shine. But let me thank Anirudh Garg of Invasset PMS. Thanks so much for giving us your time and speaking with us, and to all of our viewers also for giving us your time and getting in these details of how this trading day has been, and also the long weekend coming up. We do have the Holi holiday, and we like to wish all of our viewers in advance a very happy Holi. But before I let you go, let me also give you a quick programming note there, where do stay with Moneycontrol, because coming up next will be the Wealth Formula. This is with N. Mahalakshmi, and she's in conversation with Nilesh Surana, the CIO at Mirai Asset Mutual Fund. This is at 4 p.m. only on Moneycontrol. So stay with us.